What if I told you that misclassifying your team could cost you thousands in back taxes, benefits, and penalties? Most business owners don't realize how dangerous it can be to hire someone as a contractor when they really should be an employee. In this episode, I'm giving you a simple 3-step framework to know with confidence whether your next hire should be a contractor or employee, or if it's time to move your existing team from a contractor to an employee. You're listening to Business by the Books, the podcast that helps you, the business owner, understand your numbers so you can make confident and empowered decisions. I'm your host, Danielle Hayden, CPA, Reformed Corporate CFO, and CEO of Kickstart Accounting, Inc. I've helped thousands of entrepreneurs navigate this exact decision. And today, I'm bringing that expertise straight to you. We'll start by breaking down the IRS guidelines into 3 easy to understand categories: behavioral control, financial control, and the nature of your relationship. Then I'll share a real client story that shows the risks of getting this wrong. And I'll walk you through how to apply this framework to your own business. One of my favorite ways that we have the opportunity to help our clients at Kickstart Accounting Inc. is when they are hiring. This question is amazing. Can I afford to hire? And should I hire a contractor or an employee? So, what I wanted to do today is give you a very simple framework to decide on whether or not they should be a contractor or an employee as you bring on this new team member. I had a client who came to us a few years ago, and during onboarding, she was being slapped with penalties and fines for paying her team as a contractor. She was being sued for back benefits and back 401k contributions. You guys, the penalties are real. If you, as a business owner, pay your team members as a contractor when they really should have been an employee. So I want you to have the simple framework to know when somebody should become an employee. So there's 3 things that the IRS has given us to determine this. First is behavioral control. Second is financial control. And the third is relationship. So what does that mean? When we think about behavioral control, when this new team member starts within your company, will they be following your standard operating procedures? Will you be controlling when they come to work, how they complete the work? Will you be giving them feedback on an ongoing basis to make sure that they're following your brand guidelines and the framework in which you want tasks completed? Next is financial control. Are you going to be providing a laptop to that team member, or are they going to be using their own personal computer, equipment, home office? And then who's setting the rates for pay? In financial control, is your contractor, is your team member going to set the rate and invoice you? Or are you setting the rate and paying that team member on a consistent basis? Lastly is relationship. Do you have a agreement in place? And if this individual who you're hiring, if they have their own LLC, they're providing you with a contractor agreement. They are setting the price and invoicing you on a regular basis. And then they complete the work on their own personal laptop in a way that they choose, right? They're the expert. And that is a contractor. If this team member does not have a contractor agreement, if they are an individual and not an LLC or a corporation, are you going to be in a relationship with them for a short-term project basis? Or are you going to be in a long-term day-to-day relationship with that person? So to clarify, when we think about behavioral, financial, and relationship control, the working relationship with this team member is going to mean more than an agreement. So just because you sign a contractor agreement, but if you are providing a laptop, you are setting the rate of pay and how many hours this team member works, you're providing the brand guidelines and standard operating procedures, then it's not going to matter that you have a contractor agreement in place because your working relationship with them is set up like an employee. Now, as a business owner, I think that we're able to use our gut more often than not when we're making these decisions. So I want you to pretend like you're sitting across from the auditor, and I want you to make your argument as to why you're paying this person as a contractor or an employee. If you can't, with good faith and with a good feeling in your gut, sit and make an argument to an auditor about why they should be a contractor, then it's time to move our contractors to an employee. Now, I want to say that it is okay to change over time. We have clients who have gone through these phases. They start their business as a solo entrepreneur. And as their business grows, they really start to form a small business, creating standard operating procedures and brand guidelines. But as we're doing that, often we need contractors as part of our business. And so it's very normal as you move from entrepreneur to small business owner that you have a set of contractors in your business. Now, generally, contractors, they're going to be people who they're experts in their industry. You don't have to give them feedback or guidelines on how to perform tasks. They already have their equipment and they're operating as their own business. They're able to take their own tax deductions. And so they are setting the terms and price that you as their client are going to pay. And then they provide a contractor agreement with their LLC to your business. And we're able to feel good about that type of contractor relationship. It's okay to change. As we move and grow as a small business and you grow in your CEO journey, there's going to be a time where you want control and you want to be able to set the parameters for your brand. I know that this happened for me at Kickstart. When we created our framework, our standard operating procedures, and the way that we do business with our clients, that's when everything changed for us. And I knew that I had behavioral control because when I have a team member who works at Kickstart Accounting, they are required to follow our standard operating procedures. Our clients receive the framework that has been proven to work. And I want every single team member to follow that framework. It took me time to create that framework and set that framework up. And so we might have started with contractors, but we only work with employees now that I have this established brand and control. In terms of financial control, as you grow as a CEO and mature in your journey, you're going to want to be able to set the rates and hours for your team members. You might have resistance towards paying for their laptop and equipment. However, you're going to want to be able to set the parameters for your relationship. And you guys, once you train somebody, I love that we have long-term employee relationships with our team here at Kickstart. And for us, it's really important to have those long-term relationships. So know and understand that as you grow from entrepreneur to small business owner to CEO, that who you need in your business is going to change. Now, I want to touch on the tax implications of both a contractor and an employee so that you can communicate that to your new team member. So if you are hiring somebody who is going to be a contractor, you are required to collect a W-9 form for that team member. The W-9 is an information sheet so that you can complete and send them a 1099 at the end of the year. What's really important to communicate to this team member and to ensure that they know and understand is that they are going to be required to pay the employer portion of the taxes. As an employee, you, the business owner, pay the employer portion of the employee's taxes. As a contractor, they are responsible for both the employee and the employer portion of their pay. This is really important because we want to set our contractors up for success. They need to be saving enough money. They should be saving 25% of their net income to be able to pay their own payroll taxes. Now, once you've moved somebody from a contractor to an employee, you, the business owner, are going to set them up on payroll and you are going to be paying the employer portion of their taxes. So as you communicate with your new team member, make sure that they understand what they are going to be responsible for and what you are going to be responsible for as the business owner and employer. As this is an exciting time. I love being able to watch our clients grow and expand their team, expand their community. If you have any questions or you need a money team, go to kickstartaccountinginc.com. We would love the opportunity to partner with you and to be a resource for you. I'm going to drop several shows in the show notes. If you feel like you need more information on contractors and employees, we have done an entire series on what is a W-9, what is a 1099, when to convert. So there will be additional resources in the show notes. Remember this 3-step framework the next time you are hiring. Do you have behavioral control? Think standard operating procedures and BRAD guidelines. Do you have financial control? Are you providing the equipment? And are you setting the rate of pay and when they get paid? And what is the nature of the relationship? Will this be a short-term project? Or will this be a long-term relationship? Present this to your money team or make-believe auditor to give yourself a thorough gut check. I hope you enjoyed today's episode of Business by the Books. Don't forget to hit like and subscribe. This is the #1 way we can help other entrepreneurs find this podcast, because here at Kickstart Accounting Inc., it is our mission to help entrepreneurs understand their numbers, get access to this information, and grow and thrive in their business. So please help me help other entrepreneurs understand their numbers so they can finally grow and thrive.